right now. Hello everyone, it's great to have you join me again today. So it's a teaching series. It's all about commercial law, and we had a class before now. Of the course, I'm trying to set my camera. Okay, I think it's better this way. So it's going to be a continuation of the course we treated just day before yesterday. Commercial law. It's a course for management students in the 300 level, their first semester. So in our last class, we spoke about a couple of things. We spoke about a brief one, like a quick one into what we discussed in our last class. We talked about the source of law, and we're very particular about um, the primary source of law. We refer to sources of law as what talks about how a law is originated, how a law is how where the law emanates from. And we also talked about it being the we also talk about source of law being the authenticator. I think I need to put that on silent so we don't get distracted. Okay. Yeah, I think that's better. So we also talk about source of law being the authenticator of how genuine a law is, and we also talked about it being an historical origin of what we refer to as the rule of law. So we talked about that in the last class, and we also talked about the primary source of law, that has to do with legislation and statutes, and we were able to establish that legislation is a process of enacting a law, and statute itself has to do with ordinances. Statutes has to do with what we refer to as subsidiary legislations and constituted authorities. So we have that as that. So it's written here. It consists of other statutes and subsidiary legislation. Statutes of a law made by legislators. Law made by legislators are what we refer to as statutes. So we have that as that. So today there was a part we could not attend to because of one reason or the other in our last class, which is the question that has to do with critically examining the implication of the principle of nemo dat quod non habeat. Nemo dat quod non habeat. The word nemo dat quod habeat basically means you can't give what you don't have. So now, according to the question here, it said critically examine the implication of the principle of nemo dat quod non habeat under the law of sales of goods and the possible exceptional situation which the law has attached to its operation. Now, in its context, what it means is that you can't sell what is not yours, meaning that you can't give what you don't have. And talking about the exception, I'm just trying to wrap things up. Talking about the exception, in a situation whereby a genuine buyer, gets a property or a good from someone who is not the actual owner of the property, so far the genuine buyer or the innocent buyer, as the word may imply, innocent buyer buys and have receipts and everything in record, then even among competitors, the buyer is still on the safer side. So that is the exception, and the exception is when there is when laws are made, there are also exceptions. So we have nemo dat quod non habeat has that. So we can just move on, and we have what we call bill of landing. Now, talking about bill of landing, bill of landing is a legal document. It is detailed with important information of shipment of goods. What is bill of landing? Bill of landing is a very important legal document. and it carries detailed information about the shipment of a particular good. And this bill of lading is held by who we refer to as the carrier, which is a logistic company, and is given to the carrier by the owner, by the producer of that good, which is the shipper. Now it contains okay, we've talked about it contains serious enough like receipt. It contains important information like the quantity, the size, the color of whatever goods that is being shipped, the details of the goods. Now it can be used as a receipt. It provides that the owner, the shipment is owned and controlled by whoever has the bill of lading. So we have that as that. So now we have here a bill of lading is not a negotiable instrument. You should take note of that. Is not a negotiable instrument under the Bill of Exchange Act. Now this is unlike bill of exchange, because unlike a bill of exchange, the bona fide holder, which is the person who has the bill of lading, who is the bona fide holder, value and cannot acquire a better title than the transferor of the possession. Now, speaking about the bill of value, speaking about the bill of lading, it is not a negotiable instrument under the Bill of Exchange Act. It is not a negotiable instrument, because that is what gives you the right. That is what confirms that you are the owner of this shipment. That is what Bill of Exchange stands for. So we have that as that. So okay, now we have discussed bill of lading as a negotiable instrument. It can be seen in two ways. It can be seen as a non-negotiable instrument under the Bill of Act Exchange. But speaking about Bill of Exchange as a negotiable instrument, it becomes a negotiable instrument in the sense that when we say something is negotiable, mean that you can transfer it to another person. But when it comes to you can't transfer it to another person, in the sense that it becomes a negotiable instrument in the sense that when a good is about to be transferred from wherever it is coming from, the Bill of Exchange is given to the carrier. At that point, it has become a negotiable instrument, meaning that it has been conferred upon another person. And pending the time that this goods get to the rightful owner, it is a negotiable instrument. But the moment it gets to the rightful owner, it then becomes no more negotiable instrument. That is what it means as Bill of Exchange as a negotiable instrument and Bill of Exchange as non-negotiable instrument. Okay, we have Uchechi who has just joined us. Now. That's the essence of not coming late to a class, but nevertheless, it's good to have you join us. So we have about 4 persons streaming this live. Okay, 3. Okay, Justina, Miss Justina, it's great to have you here, but this is not your course. Yes, this course is for 300 level, but if you still choose to stick around, all good. But this course is basically for 300 level. Now, James Janet, okay, it's great to have you join us. Where are you streaming from? Where are you streaming the class from? And are you a student of public admin or business administration? So, and I'm not sure you were in the last class. So, to answer Uchichi's question, we are actually treating. I've talked about what it means by nemo tat quod non habeat. It's a Latin word, and it simply means you cannot give what you don't have. We treated that in our last class, but it was tentative. So I just done I just took a decisive action on it now, and it was well explained. So now we're talking about the Bill of Exchange, and the Bill of Exchange, we say the Bill of Exchange is defined. The Bill of Lading, I beg your pardon. Okay, public admin. Okay, James Janet, it's great to have you join us. So the Bill of Lading now. Speaking about the Bill of Lading, it's a very important legal document. It's the detail. It's a document containing important detail about a product or a goods. Now, and this is held by a carrier. Talking about goods now, it's held by a carrier, which is the logistic company, and is given. The carrier collects it from the shipper, which is the one giving the goods to the carrier. Now, this contains the bill of lading. Now contains information about the shipment, the quantity, the measurement in size, quantity, the type of goods, what the goods is all about, and everything. Find all this in the bill of landing, and it also serves as a receipt. Now, it provides the owner the legal control and ownership of the goods. That's what the bill of lading simply means. And we said the bill of lading can be seen as a negotiable instrument and a non-negotiable instrument. It can be seen under the Act, and I specified here that a bill of lading is not a negotiable instrument under the Bill of Exchange Act. It is not a negotiable instrument under the Bill of Exchange Act. Okay, we have about 5 persons streaming this live, and just 2 persons has liked this live stream. Please, if you are here to smash the like button, do well to like the stream so YouTube can present also other persons who might be interested. Now, so we said bill of lading is not a negotiable instrument under the Bill of Exchange Act, and this is because when you have your bill of lading document with you as the rightful owner, then you can't share it with anybody again. It's then not a negotiable instrument. But at the process by which you don't have your bill of exchange and you've made payments for some goods and services, for some goods which are yet to get to you, at that point it's a negotiable instrument, because the shipment, which is the producer of these goods, is handing over this bill of lading to the logistic company, which is the carrier. So from them to another person until it gets you, then it's no longer a negotiable one. But by the time it's still out there and it's being given from one person to another, it's a negotiable instrument. So according to that, we have that as that. So we've talked about what arbitration is in our previous class, so we'll just continue. We talked about what commercial arbitration is, and we've spoken about the advantages of commercial arbitration. So now we just move on to the next thing, and we have here name various arbitration institution. This is where we are starting from properly today. So we have different, let's not forget, we talked about arbitration in our last class. Just in a nutshell, we discussed that arbitration has to do with 3 parties, whereby there's a misunderstanding between 2 parties, party A and party B, and the 2 parties thereby brings in a third party who is a very neutral party. The third party is usually very neutral to come and settle the dispute between them. And at the end of everything, the third party gives a decisive dealing, it takes a decisive action, which we refer to as what we call award. Now, that award is certain and is constant, meaning that the final decision taken by the neutral third party will stand. So we were able to talk about, commercial arbitration as well, which has to do with arbitration disputes when it comes to commercials between companies, contracts and companies. So we talked about the advantages of arbitration, which we talk about the speed and flexibility. Unlike matters can take forever, but it's not like that when it's the case of arbitration. We have confidentiality, we have the neutrality of parties, we have choice of experts, whereby the arbitrators get to choose who's going to handle their case, and we have the enforcement of award, meaning that the third party has to enforce the award. Now we have various arbitration institutes. It's going to be a very long class, so we might not be going too much into details of things, but just make sure you follow, because I'll be giving out the points. So we have the various arbitration institutions. So talking about the various arbitration institutions, we have about International Chamber of Commerce, which is the ICC. We have the London Court of okay, I think I have to quickly share just a moment. We'll back. Okay, I think it was I think we're back now. It was a network issue there. Yeah, I hope everybody is still with us. Can you all hear me now? I think it was a network issue back there. Are we all still together? I think I should. This way. Okay, yeah. Okay, Uchechi, um, James Janet, Lania, are we all still together? Okay, I just let me assume we are all together and just move on. So we have institutions, various arbitral institutions. We have the International Chamber of Commerce, which is the ICP. We have the London Court of International Arbitration. We have the World Intellectual Property Organization, that is the WIPO. Arbitration, we have the International, excuse me. Okay, awesome, awesome. So we have International Center for the Settlement of Investment Dispute, that's ICSID. So these are the various um, institutions for arbitration. The ICSID, International Center for Settlement of Investment Disputes, International Center of Settlement. And these questions can also come out in the sense that you have to write the abbreviation, complete the acronyms of these words, like the ICSID might be asked to complete the acronym, which is International Center for the Settlement of Investment Disputes. Now we have WIPO, which is World Intellectual Property Organization. That's the WIPO, WIPO, and we have the London Court of International Arbitration. We have International Chamber of Commerce, ICC. I think I know of this ICC here in Abuja. I think I've been to the office once or twice. ICC. I think I know of them. International Chamber of Commerce. So we have that as that. So these arbitration institutions, they are actually saddled with the responsibility of overseeing the proceedings in the sense that the legal processes or actions of arbitration process, they are saddled with the responsibility of doing that. So we have, and the advantages of arbitration institutions are: one, automatic incorporation. Incorporation is the sense that the legal process of creating an entity or corporation, automatic incorporation of the rule and regulations that governs arbitrations. Now, they also, another advantage of the institution of arbitration is that it provides provision of trained personnel. This body is charged with the responsibility of providing trained personnel in the sense that to take actions on behalf of arbitrators. They also review drafts or from award rendered by arbitral tribunal before sending the final copy to the parties. So when there is a draft, when there's before an award is being implemented, it's the first stage whereby it is a draft. It is when it has been reviewed by this body, which we are referring to as arbitral arbitral institutions. That is when it becomes an award. So they review this draft before sending it to the parties as an award. So we have that as that. So now we have explain using decisive cases the rules of consideration under the following headlines. So there's something we call rule of consideration. What exactly does this rule of consideration means? Now let's take note of this. The rule of consideration itself means that the rules of consideration itself is a very important, is the main element of a contract. Consideration, the rule of consideration itself is the main element in a contract. Without it, both parties cannot say they have a contract. Meaning that without this consideration being fully observed, a contract cannot hold. So now that is what the rule of consideration stands for. Now they now say here, using decisive cases. Now let's talk about consideration not being past or not being obsolete. Decisive cases now. Now we're looking at it as consideration as not being past. Now, if consideration is the most important thing, there will be need for consideration if there had never been a contract. It's a contract, it's a consideration that makes a contract legit. Promises from both parties. This is what I'm bringing to the table. This is what I have to offer. When we do this, then this is what we are going to get, and this is what we are going to change. This is what we are going to share. Those are promises from both parties. Without this consideration being put into effect, then this contract is useless. Now, using considerable, using according to what we say, it says using decisive cases. Now, the very first decisive case we are going to talk about is that consideration must not be passed. Why should consideration not be passed? Now, consideration is a promise given after the act is completed and is independent of that the act is only executed and finished before the promise is made. Meaning that the consideration must be current, it must be effective and not past. So we have consideration must not be consideration must not be adequate. It says there in the absence of fraud, duress or misinterpretation, the court will not question the adequacy of the consideration. Consideration does not necessarily be adequate, meaning that it can go through review over time. So far both parties agree that it's a way forward. It does not necessarily have to be adequate. So we have consideration must be real and for value. It must be real. Since consideration is a price, it must be sometimes real, something of value. Therefore, if the price reaches the plaintiff, now who is a plaintiff? Now let's just quickly talk about that. A plaintiff is someone who brings a case against another in a court of law. That is who a plaintiff is. A plaintiff is someone who brings a a case against another in the court. And we have plaintiffs and we have what we call defendants. Defendant, now talking about defendant. Defendant is someone who brings the person who is sued or accused of a crime in a court. That is the defendant. The plaintiff is someone who brought the case before the court. But the defendant is someone who is being sued and allegedly accused of a crime. So now we have consideration must be real and for value. So we have it's a price, so definitely it should be real and something of value. So we have consideration must be legal. I think that's self-explanatory. So we have that as that. So move to the next thing. We have what we call taxation. Define taxation and explain the component of a good tax. Now we're talking about what taxation is. Now, in a plain language, by Oxford English Dictionary in the year 1973, taxation is defined as tax as a compulsory. Okay, now before we can talk about taxation, let's talk about tax. Now, what is tax? I think we all have a basic understanding of what tax is. Compulsory levy imposed by the government on a citizen. Compulsory levy, that's the keyword. So now it says tax as a compulsory contribution to support government levy on person, properties, income, commodities, transaction, etc. Now at a fixed rate proportionate to the amount on which the contributor is levied. Now, however, to further simplify this definition, we have same Oxford in 2006 defined tax as money that you have paid to the government so that it can pay for public service. It is further concluded that people pay tax according to their income, and businesses pay tax according to their profits. So now we've been able to get like three definitions here. The first definition is that it's a compulsory levy contributed to the government contributed to support the government. Or tax as well can be defined as the money we pay to the government so that it can pay public service. And we can also say tax can be defined as a compulsory levy charged upon the citizen of a state according to the level of proportionate to the level of their income, because we don't all pay the same tax. People who earn a million don't pay tax as people same tax with people who earn in hundreds of thousands. So it's proportionate to the income of the citizen, and it's a compulsory levy. So now I'm talking about taxation now. Taxation now can now be defined as the levying of tax, the process whereby government impose financial obligation on its citizens. So we can refer to that as taxation. So we have that as that. So the component of a good tax. Now talking about the component of a good tax, we should have what we call simplicity. We should have what we call equity. Now talking about simplicity, a good tax system must be straightforward, simple, and coherent. Coherent in the sense that it is traceable. There are no cumbersome. It's not cumbersome. It's traceable. It is as open as possible. Talking about simplicity, it must be straightforward, simple, and coherent. We have equity. An ideal tax must be administered on the principle of equity. There are two types of equitable principles in taxation system. We have the horizontal equity and we have the vertical equity. Now, horizontal equity is that those in equal circumstances should pay an equal amount of tax. And when you say vertical equity, it means that those in unequal circumstances should pay different amounts of tax. Just like what I said earlier on, that tax is not a flat rate. Payment of tax is not a flat rate. It is proportionate to an individual's income. It would be cheating for me to be earning 5 million in salary as my salary now, or profit on a business, and I'm paying the same level of tax with somebody who is earning just 100,000. So now talking about equity, that speaks for it. So now, and it is said that we have two different types of equity as a good component of tax, as a component of a good tax. So we have the horizontal equity and we have the vertical equity. And the horizontal equity is said to be the equal circumstance whereby you equal people that earn equal amounts pays the same tax. While the vertical now, people that earn differently pay different taxes. And that is what we call equity, the good component of the good tax. So we have the third one, ability to pay. By this we mean that tax must not be unbearable for the taxpayer. Exactly. Taxpayer must be able to pay, it must not be unbearable. Administrative efficiency, we have certainty, we have flexibility, and we have stability. We have neutrality. Tax must be neutral. It must avoid distortion of the market. Whether there's inflation or deflation, that should not affect tax. It should be neutral. State the okay, so we have about seven of them already mentioned. So we have the next question here. It says state the importance of taxation. Now, talking about the importance of taxation, what makes tax so important, and why does citizens have to pay and obey government and obey their financial obligation by paying their tax? Now, talking about that, we have a country that will embrace development must initiate a good and laudable tax system. There must be development and progress in the company. Then they must embrace um, the initiative of a good tax system, as this will help in generating income for the operations. That is the bottom line of why government collects tax, to generate income and get things done in the country. So now, income tax, talking about that now, income tax raises revenue to meet government expenditure. Talking about income tax is tax not collected from businesses, but it is collected from individuals that earn salary, like their monthly income. So this tax all put together helps government to meet up with expenditures. Tax system can be an instrument to discourage promotion of certain businesses that are found to be detrimental. Very well too. Indirectly, if directly, if government does not want a business to survive in its territory, then the level of the tax will be um what is the word to use now? Will be way too much, be absorbed. They're indirectly telling you that we don't want this business to survive. So the demand of tax is like maybe the profit of a business is 1 million in a month, and government is demanding for 800,000. Indirectly, they are telling you that they don't want this business because how can you profit like 1 million and you've not even paid salary and everything? And okay, profit is when you minus your expenditure and your cost of production. Your cost of production from I think yeah, profit basically is when you minus your cost of production from the main cost, the cost of production, and when you minus it from your capital, or yeah, when you minus your cost of production from what you invested into the business, then you have the left as profit, if I'm not mistaken. So now if by the time you've done all that and you have your profit and government is demanding for about 80% of your profit for tax, that is very very much absurd. So it's one way to discourage some certain business in a country. That's one of the importance of tax system. So taxation has also been described as useful in assisting in the redistribution of wealth. Just pick out the points as we say this. Pick out the points. Distribution of wealth. Tax also has been helped to determine population growth. You can also develop that population growth, distribution of wealth, a way whereby government can discourage a certain business. It's also an instrument to it's another instrument used by the government to generate finance for expenditures. So we have that as that. So we also have give the classification of taxes. Talking about the classification of taxes now, we have two major classification. Tax is classified into two major classes, which are the direct slash indirect tax. Direct and indirect tax are the two major classes of tax. And we have it all depends on the taxation. We have the direct category of tax, which include the direct or indirect taxation. We have taxes can be classified into either direct or indirect. Now, the distinguishing factor between these two factors is that whether the taxpayer is aware of the incidence of the particular tax paid. Now, direct tax. Now, speaking about direct tax, we have it's levied directly on the person who is expected to pay the tax. But talking about indirects now, indirect tax demand. It's a demand from one person in the expectation and intention that he shall identify himself as an expense to another. Now, indirect tax is borne by the person other than one from the whom tax is collected. Now, such as indirect tax never notify nor have actual knowledge of the levy. Talking about indirect now, okay, like indirect tax now, basically, do you know that MTN service provider, the service provider MTN that we all use in this country, they charge us for VAT. Many of us don't even know. Make your research, make your finds. You buy recharge card before you can call. You load data before you can browse. And these people are still charging us for indirect tax. For we still have VAT, value added tax. And many other things like that you pay value added tax for that you have no idea of. So value added tax, all these things is fall under the category of indirect tax. But like direct tax now, you know that you are paying, like when you get your salary, your tax is being removed. That is direct. You know that okay, I'm paying for this. But indirect tax is just more of fact that you don't really know that you are paying for tax. Subtle. That's what. So we have proportional and progressive and regressive taxation. Talking about proportional tax now, we have this kind of tax in which the amount paid to tax are directly. Proportional tax is just basically the tax that you pay according to what you earn. Progressive tax now, as your salary increases, as your income increases, so as your tax also increases. The tax you pay also increases. Now regressive now talks about when you when your income increases. Okay, let's see what they have here before I explain my own. This is a tax whose structure is such that percentage of tax rate paid becomes smaller as value of property tax um, increases. Thus, a person earning higher income pays lesser than a person earning low income. There's a mystery to this particular kind of tax anyway, but it just has to do with when you at the point which you earn higher, maybe your property that is being taxed appreciates in value, so your tax will become progressive or proportionate to the value at which the property is. It begins to drop from the word regressive. It begins to drop. So that is that with that. Now we have the next question. It says explain the historical development of the concept of hire purchase and suggest your own definition of the term. Questions like these are actually very simple questions. Don't be confused. It says briefly explain the historical development of the concept of hire purchase and suggest your own definition of the term. Two things you're supposed to talk about: discuss and define. You might not definitely know what the historical. Fine, you might have read about it, but in this case, say something about what you think hire purchase is. Now, hire purchase now can be in two forms. The first form is hire purchase. Okay, excuse me. I think I have to scroll down my page a bit. Now, hire purchase now has to do with an arrangement whereby you are buying an expensive consumer goods where the buyer makes an initial down payment and pays the balance plus interest installmentally or in installment. That is the first form of hire purchase. Now the second form of hire purchase now is that you hire a particular goods. The very first one now, you want the property to be yours. You understand? And you make initial down payment, and over time you balance up with interests in installment. Now the second thing to it is that you don't want the property to be yours. It's a period of acquiring the property for the time being, whereby when the purpose of this, the purpose behind getting the property is fulfilled, then property is returned back to the owner. And that is where what we call bailment comes in place. Now, what is bailment? Now, bailment, don't forget that you are giving an history already. Bailment now is the delivery of goods. Excuse me. Bailment is the delivery of goods by a party. Now, this party is called the owner, which you can refer to as a bailor. Now, the bailor delivers a good to another party. I think that was a mistake. It's not supposed to be the bailor. It's supposed to be the bailer. I think that was a typographical error. The bailer. Now, the bailer now, which is the owner, gives the good to what we call the bailor. Now, for a purpose, upon there's an agreement, there's a contract. Now, after this contract has been fulfilled and the purpose accomplished, now the goods is being returned to the bailee. Now, the Bailey now, talking about the Bailey is the owner of this product, the owner of this good. And the bailor is the one that the good is being delivered to. And there happens to be a contract. We are talking about bailment here. And this has to do with some part of hire purchase. So after the purpose at which the contract is found upon is fulfilled, then the goods is returned back to the bailee. So that's it. So let's see what we have here in the material. It says here, hire purchase transaction is a bailment of goods, but with a provision for the option of sale or transfer of the property. Can you hear now? There are two options. It's either you want to sell or you are just transferring the property. The contract of hire purchase is mostly governed by Hire Purchase Act, Law of the Federation, 1999, and common law. So I mean, we've spoken at length already. All this one I said now, you've written half page, if not a full scholarship already. And that's nothing less than 10 to 15 marks. To get A when it comes to pen and paper is actually very easy. To get A is very easy. So we have that as that. Okay, let's just quickly go through it says the historical development of the concept here. The concept of hire purchase is an important aspect of commercial transactions developed in the United States, United Kingdom, and can now be found in existence all over the world. Okay, now talking about the history now, it actually started from where it's called United Kingdom. It's actually a very important element in commercial transactions. Hire purchase is actually found in commercial stuffs, commercial transactions. So the keyword now talking about the history, it's a very important element found in commercial or in important aspect. It's important element, most important thing that is found in commercial transactions. And it started basically from the United Kingdom, and now it exists all over the world. It's also called the close-end leasing. You can also refer to it as the close-end leasing. In the True Hire Purchase Act, it began it was introduced in 1889 by the rule that a buyer in possession of a good could pass good title to a bona fide purchaser or pledge. Now in Nigeria as well, the contract of hire purchase is also recent origin. Indeed, the first act passed in 1965. Local tenders, retailers. Now the basic thing is that talking about the history now of hire purchase, it's an important aspect of commercial transaction. That is the cocoa. I beg your pardon. That is the most important thing. So it's an aspect of commercial transaction, and one thing is that it started. Its place of origin was in the United Kingdom, and now it's all over the world. And the concept is that it allows the buyer, the rightful owner of a good, to transfer ownership or to sell. The option of transfer of ownership or sale to the rightful purchaser, or we call confident or bona fide purchaser. So that's that. You'll be able to see a lot of things about that. So we have that. All this we'll be able to discuss. Hire purchase is distinguishing from hire. I want to talk about hire now. Hire is the option of trying to use it and return it after you are done using it. So you have that as that. Hire purchase, loan and mortgage. Loan and mortgage is a kind of arrangement where one person who desires some financial finance borrows money from a person or a financial institution for his use in order to satisfy. That's about loan and mortgage. Talking about somebody in need of finance and borrows money from a financial institution. That is about hire purchase, distinguished from loan and mortgage. Mortgage and loan is more of financial support compared to hire purchase. Hire purchase is more of hiring a product for your personal use and return, or hiring a payment instrumental of a particular product eventually becomes your home. So we have state the reasons for the adoption of hire purchase system. Now, some of the reasons for adopting hire purchase system, we have the most important reason is that the first is that it enables credits to someone who is unable to pay cash for goods he wants and who would happy to have pay some deposit, therefore pay balance it. Exactly. It's a very great opportunity and it's a great privilege for people who want to have something, you understand, and they don't have the money, um, they can't afford to buy it at once. So they get to pay, make a down payment. The good is given over time, where they get an interest, be attached to it, and they will pay in installments. That's one of the first thing. So the other one says here, okay, the system is that the dealer or the manufacturer of the goods cannot always provide credit, and yet the goods must be bought to enable dealer in business. So okay, I think it was a network issue there. I think we are back now. Now, to explain this, one of the adoption of hire purchase now, we said something about it enables credit, meaning that somebody who does not have money to pay at once for a good is given to pay instrumentally. Now, it's also a reason that, okay, allows, it's still also credit provision again we're talking about. But now, credit provision in the sense that the manufacturer cannot give his good out on credit, and the manufacturer wants to be in business. So now, not totally giving you out on credit, you have to make a down payment. So for the down payment you are paying, you can use it to do something else, and you pay in installment with interest. So these are the options. So thirdly now, the adoption of hire purchase system is possible a vision of money lender, which regulates the conduct of business of money lending. It has somehow to do with money, like somebody is lending you. It has to do with money lending. Like a producer is giving you a product, maybe a car, for example. Maybe you get it on hire purchase. The car is not yet totally yours, so the owner now has given you his car. You make money with it. You pay some cut to him, and you have some cut for yourself. So it's more money lending opportunity. Okay, so let's just move on. It's been a very long. We still have a very long way to go, so I might not be really going much into details now, and so we can cover a lot of ground. This past question I'm using now, I believe majority of us has it, and for as many of us who doesn't have it, request for it in the comments, or if you share. And I have my own notes, my special notes that I've made. If you'll be needing that as well, just request in the comment section that you need my special notes. If you need the past question, request as well that you need past question, so I can forward everything to you. All this will just help. Everything still boils down to you using the resources you have available. So we have discussed the element of hire purchase transaction. So we have offer and acceptance. Basically, this is straightforward. An offer and an acceptance. So what is offering is proposing something to you. Buy 3 eggs, get 1 free. That's an offer. The acceptance is, okay, 3 eggs, get 1 free. Take value for your proposal. The value now could be money or anything. Basically, offer and acceptance. Okay, Uchechi says she needs to note. Okay, I think I have you on WhatsApp, and after the class I'll just share it with you, so it can help. So we have the capacity of the parties. Now, the liabilities of infants under the general law of contract is the same under hire purchase agreement. Now, infants are not liable under the hire purchase agreement except those relating to necessary and beneficiary contracts. Now, under hire purchase, there's something we call capacity of parties. Now, it's element of hire purchase transactions. The elements, we've said something about offers and acceptance. Now, we're talking about capacity of the parties. Parties, in fact, under the capacity, infants are not allowed to partake in hire purchase. So we have write brief note on the obligation of the owner, hire, and the dealer. Obligation, the responsibility of the owner, hire, and dealer. Now talking about the obligation of the owner. First obligation of the owner under the common law is to deliver the goods, which are the subject matter of the hire purchase agreement to the hire. Now, owner responsibility now is to deliver the goods. Now, fundamental duty and its breach will entitle the hire to, okay, now that's the first thing that is expected of the owner. Now, what is expected of the hire? The hire now, this is the fundamental obligation of the hire to accept. About that was a call. My call came in at the wrong time. So now, obligation of the hire now is to accept the offer, which is the goods the owner is giving at that point. So now talking about the dealer now, in practice, generally, the hire is allowed to face with the dealer in the transaction to enforce certain rights under a independent contract entitled to the three of them. Now, dealer is closer to the hire as stated by the law. Now, dealer now, in between the hire and the owner, the dealer is coming in as an agent. See how these three things work. The dealer, hire, and the owner. The owner is the person who owns the good. Hire is the person who is accepting the offer, and the dealer is the intermediary between the hire and the owner. So we have that as that. So we have give a brief discussion of the following concept of law: agent and bailee. Okay, agent and trustee. Okay, now who is an agent? My own interpretation to an agent is that an agent is an individual who has what we call gotten delegated authority. Delegated authority from who? From a superior, or from master, or from the contractor. Any word you want to use. But an agent is always acting on the principal. Is always acting on the behalf of the principal. Principal is one who has conferred authority on another person to act on his behalf. That's who an agent is. So we have now a bailment. Let's not forget we said something about bailment the other time. Arises where personal property is delivered or transferred by owner to another person. The owner is the bailer, and the person who is receiving is the bailee under an agreement. So now, talking about the bailee now, bailee is somebody who owns a property and is transferring to a bailor. So where does an agent come in? An agent comes in between the bailee and the bailor. And the work of the agent could be that it is his work is that it's serving as an intermediary between the two of them. The same thing we have agent and trustee. Agent and trustee, they are like you can use them interwovenly. They work hand in hand. But before you can have an agent, that means you are entrusting some things. But the thing is that an agent, unlike a trustee here has more power than an agent. Because trustee is that an agent might still be limited in some aspects, but a trustee he has all the power needed. You are entrusting your property totally in his hand. But agent is more of you are only giving him to carry out some information or to carry out some activities on your behalf, but he still has to report to you as a principal. So all these things is just about getting the concept, getting the idea behind them. So we have that as that. Okay, here it says distinguish between agents and servants and independent contractor. Definitely the servant is different from the agent. The servant is lower in cadre to the agent. Agent take decision on behalf of the principal, but servants can't do that. Servants only carry out instructions. Do this, to get it done. Agent now is acting on behalf of the principal. Now the independent contractor, okay, now render services to the employer in the course of an independent occupation or calling. A contract with the employer only as to the result to achieve, but not as to means whereby the work is done. Now the independent contractor now goes in partnership with the principal or the employer. There's an instruction. He helps in how to achieve this instruction. It does not get the work done. Independent contractor only make way to which an instruction, an event can be done successfully. I hope that is clear enough. So we have concept of the law of agency. Law of agency now, all these things they are still under. Okay, all this one we're talking about now, we are distinguishing, between agent, servant, independent contractor. So we have the concept of law of agency. Now, the law of agency is a very important part of commercial law. It carry out, commercial law as companies can only carry out their daily business activities through agents. Now, the essence of this law of agency is to ensure proper and legal dealings when it comes to the actions of agencies. So, law guiding agents, just as that's just the law guiding agents, how they do their things, their mode of conduct, their ethics, and everything. So we have that as that. So we have the theories of agencies. We have the power liberty theory. We have the consent theory. We have the qualified consent theory. These are the three main theories of agencies. So talking about the power liability theory, this concept of agency exists when a person, which is the agent, acquires power to alter the principal's legal relation with the third party in such a way that it is only principal who can sue and be sued by the third party. Now, this focuses on external relationship with the third party and ignores the internal relationship between the principal and the agent. Nevertheless, they are subject to fiduciary duties of the same way of agents. Now, power liability. This more looks to me whereby the agent bycalls the principal. Now, let's take this again. Agent here acquires power to alter the principal's legal relation. Alter, when you change the flow of things. That's why it's what power liberty. It's like when the agent is trying to boycott the principal in order to get favor from the third party. So the key word here is that agent acquires the power to alter the principal's legal relationship with the third party. So we have consent theory. Now this arises in a situation where the agent is acting on behalf and for the principal with the consent of the principal, from the word consent, with the knowledge, is aware, he knows what is going on. That's the concept when the agent is acting on behalf of the principal, and the principal is fully aware of all the things the agent is doing. The principal now has placed his trust and confidence in the agent. We have qualified consent theory. Now, this happened in a situation where the actual authority of the principal was not given initially, but the action of the agent became acceptable and approved by the principal. Qualified consent. Categorically, the principal did not hand over power, or he does not hand over his consent to the agent. But because of some wise decisions and some wise and wonderful achievements of the agent on this field, then the principal just decided not to say anything since he's doing it well. Then I think is whether I give him the go ahead or not, it does not really matter. So far he's doing what is expected. So that is qualified from qualification, how he handles and take decisions. So we're able to talk about the power liability theory. So the theories of agency, power liability theory. We have the consent theory, and we have qualified consent theory. So we have all that as that. Okay, we've talked about the bill of lading from the onset. So we're just going to talk about the function of the bill of lading now. The function of the bill of lading, we have it acts as a document of title. It acts as a receipt for goods put on board with the vessels. It is the contract of carriage of goods, or at least evidence the contract of carriage. It is the evidence of the contract of carriage, and it acts as document of title, and it also acts as a receipt for goods on board. So we have that as that. Okay, so we move on to short note on three of the following. Okay, so we have short note on pre-colonial judicial system in Nigeria. Talking about pre-colonial judicial system. So pre-colonial judicial system simply means what happened, or what was the judicial system of Nigeria like before the colonial masters or colonial rulers came in. So the word pre. So when we have post is after, pre is before. So now talking about pre now, what exactly was going on? What was the judicial system? Let's not forget, when we talk about judicial, that's interpretation of rule and regulation, law of the land. What was it like when we talk about implementing the law of the land in Nigeria before the colonial rulers came? Now, basically, all tribes were working on what we call the customary law, and this law gotten from customs, from the name customary. So a law gotten from customs to guide them on how to behave, what not to do, what to do, and what have you. So we have that as that. So talking about customary law, we have in the northern states, we have the emir as the supreme ruler, and he has advisors from the Supreme Court of the land. That is happening in northern state. Okay, Miss Janet says she needs my special note. Okay, I will send it to you. I will send it to us at the end of the class through WhatsApp. I'll do just that. So we have so now pre-colonial era. Now we'll talk about the judicial system in Nigeria before the colonial rulers came. Basically, all parts of Nigeria, the major three tribes in Nigeria, they were functioning on what we call customary law. So in the northern part, the emir is the supreme ruler. The emir is the supreme ruler, and the emir is assisted from constituted bodies in the Supreme Court in the land. So we have the resolve land, family, and inheritance disputes. So in most cases, these cases are referred to al-Kalis, who are teachers of Islamic law. So in the northern part, then cases like solving issues with family, inheritance, and so on, they are referred cases like that are referred to who we call the al-Kalis, because they are teachers of Islamic law. And let's not forget, basically, the majority were Muslims and they were following the law of Islam. That is that in the north. Now in the west, which is in Yorubas, they they were dealing with what we call Oba. Oba in council adjudicates all issues brought before him. Oba is the supreme ruler in the west, so they apply strict customary law in resolving the dispute. Oba and his elders in council, the eighth grade, they all help Oba in settling disputes. So we have I think there's one for okay now. Okay, in the west we have Oba and his elders helping each other to solve disputes. Now in the east we have elders in councils and the eighth grades. Elders in councils and eighth grades help very much in the east. Then there was no centralized, unlike in the north and in the west, where there's a centralized a body with authority in settling cases. But in the east, it was different. It was a different thing entirely. We don't have what we call Oba then. It was basically elders in council and age grades that help in settling and in the application of the customary law. All tribes in Nigeria also have customary law regulating crime, you know, cases of society like theft, rape, murder, manslaughter. All have power within their communities to impose fines, banishments, imprisonment, and all that. So we have that as that. All right. I want you to know I'm in Nigeria. Nepal has done their stuff again. Okay, let's just class is almost over. So let's just keep moving. Okay. So there's something we call element of unfair. Okay. There's something um, we call trademark infringement. Now, trademark infringement simply means, for example, Pepsi has a trademark. A new company coming from scratch now wants to go far and have fame like Pepsi. So instead of them to develop what they have and start their own brand and be known for what they do, instead of them doing that, they are now going after Pepsi products, designing their brand on their products very alike like that of Pepsi, confusing the public, thinking that they are Pepsi. Or, let me put it this way, they are using the trademark of Pepsi without having the permission from Pepsi. Trademark is what make you stand out. It's what make your product, your company, or your organization stand out. Just like when we see Apple now, we know that Apple logo is their trademark. Talking about an apple that has been beaten some side, so that's the trademark of Apple. So we know that is Apple. So the infringement, from the word infringement, without getting proper affirmation or proper go ahead from the owner, just went ahead and used it. So that's what trademark infringement. You are infringing on the rights of every trademark. Every trademark of an organization is exclusive to them. they are the only one that has the right to use it, because trademark is their is what they stand out for. So we have that as that. So we have what we call trade libel, spreading of false information about the quality or characteristics of a competitor's product. So if you feel intimidated by your product, by your competitors, and you start to pay people to do bad, to spread bad information about them. That's what we call trade libel, spreading of false information. So we have okay, now what exactly trade libel can also be related to as passing off of something referred to as malicious falsehood. It can be defined now. Trade libel is a thought that is related to passing off of something. And let me give you this. Trade libel can be defined as a process whereby a competitor passes wrong or bad information to the public about another competitor in the same industry. That's the keyword. Pass something as we call malicious falsehood, wrong information, to tarnish the image of the other competitor. I hope that's well understood. So we have the elements of trade libel now. We have false statement, we have malice, and we have damage. False statement. We have that as that. Okay, just move on. Okay, so we have what we call statutory materials of source of law. It says here, discourse briefly on legislation and statutes as a primary source of law. I think we spoke about this in our very first discussion. So we have materials of source of law, statutory materials as source of law. So we have materials of source of law include statutes like sales of goods, okay, criminal code, Nigerian constitution. These are statutory materials. We have judicial materials as source of law, judicial proceedings. Judicial proceedings, we have judicial proceedings, the principle of law, basically ratio of all these things are just sources, statutory sources, judicial sources, and we have that as that. So we have reasons for studying of source of law. Why do we have to study the source of law? To get understanding of the various means by which the law governing the society is made, to know the foundation at which a law is being created. A mastery of the source of law of a given society also enhance an understanding of the historical factors that have influenced the evolution of the law. When you study the history, the study of a particular law, you get to know the foundation, the historical factors that influence that law. You understand? Facilitate an understanding of the process of you get to validate the law, you get to have a better understanding, and you get to know the influence of the history. So we have secondary source of law, whereby we have the foreign materials, we have the law library, and okay, now talking about secondary, we have legal journals, we have publications, we have scholarly articles. So the secondary source of law, we have journals, we have publications, we have scholarly articles. So we have foreign materials are also secondary source of law. They are published outside the jurisdiction of Nigeria. So we have that as that. Now the use of source materials. Source materials, we have the law library, Nigerian Institute of Advanced Legal Studies, and Nigerian Institute of International Affairs. So the use of source materials. Source materials are materials whereby You can find helpful information on how, helpful information on how some law are brought into play. So now the law library. So source law library is a source material for law. So it's ensure proper essential to the proper study of law. So it helps you get familiar. You should be very familiar with the catalog and shelf system of the library so you can get what you want. So we have the catalog now. Catalog is more of like a display of items available in the store. I mean, I said it's in the library. So what is the function? Yeah, allows access to the collection and provides service to the users. Enables users to find book easily. You know, use of author name, title, subject. Enables users to know the following: all the work of a given author and the book available and written by the author. We have organization of library, acquisition of department, reference service. When we talk about the organization of library now, what are the services library offers? We have acquisition department. Okay, these departments, you know, they for you to okay they for you to acquire books, pamphlets, publications, visuals, you have to go to this acquisition department from the name acquisition acquire. Reference service, reference in the sense that it is this section that staff answers reference questions, also biographic service, and okay, from the word reference, you need something, you make reference questions like, okay, this is what I need, okay, give suggestions and references on how you get them. All these are under organization of library. The acquisition department, reference service, judicial system, customary law. Okay, yeah. So reference service, we have that. So there's something we call judicial system before colonial. That's a pre. I think we talked about that. That's a pre-colonial era, whereby all three major tribes depend on customary law, by the north, the Yorubas, the west, and the east. So, and we've defined customary law. Okay, so we can just move on. So so we have the British court. Okay, now the British court has three separate organs: full court, divisional court, and district courts. So we have that as that. So we'll be just move at a very fast pace so we can cover. Okay, so so there's something we call inferior courts. Inferior courts are four types of courts that could be regarded in Nigeria as inferior courts. Now, while two, those strictly could not be regarded as courts, but important role and institution in jurisdiction of Nigeria. So we have the very first one is native and customary courts. From the word native and customary, it has to do with what the people believes in, the custom they get to believe, the people get to believe in, and the qualifications of this is that from the word native, it just has to do with the custom, and the custom and what they believe in. So we have that as that. This is also called the district court, where we have the magistrate court existing only in the civil jurisdiction in another area. So we have what we call justice of the peace. Now, the justice of the peace need not to be magistrate in the first instance, but appointed justice of the peace publication in state of gazelle. So we have what we also know as juvenile courts. Juvenile courts, in the sense that the first enactment of is a court jurisdiction to tie all offenses committed by children. Is a court for children. That's what juvenile court means. 14 and young person. The age of 14 and 18 years of age, the magistrate chairman panel, That's also called for children from the age of 14, okay, and 18. Okay, I think, yeah, yeah, person between the age of 14 and 18 years of age. So we have that as that. So the Supreme Court, we have the law governing and Supreme Court derives from the following causes, from the following sources. Now, the Constitution of the Federal Republic of Nigeria established that the court and okay, and the Supreme Court Act. Supreme Court is more of the supreme, like the word, like the name Supreme Court of other, like the boss court of other courts. So we have that like that. Okay, so we just okay, we just have to move a bit faster. Okay, so we have what we call constitution. The court is constituted by, okay, I think I'm mixing that up. I think we've basically spoken about all those things. Okay, mode of communication of acceptance. Okay, agency, theories of agency. We're talking about the theories of agencies. Okay, general and special agents. Okay, commission agents. Okay, let's just quickly talk. Okay, now I think we are live. Now, a general agent is one who is authorized to act for and on behalf of his principal in his affairs in connecting particular kind of businesses. We have that as that. So now, a special agent on the other hand is one authorized to act for and on behalf of his principal for a special occasion. General, it does general thing, but special, it can't do general things, specifically going to do one certain thing. So we have the commission agent. This is, is consigned from foreign principals. Commission agent is the one to whom certain goods have been consigned for a foreign principal. A commission agent is therefore saddled with a dual responsibility, firstly, as an agent to the principal with equal rights and obligation for any other agents. For secondly, an agent who does not bind principal contractual to the third party. Now, the commission agent is just basically on commission. He has two roles specifically, for consigned foreign principals, and we have the mercantile agent. The mercantile agent is the agent having authority to sell or to consign goods for the purpose of sale. Mercantile, talking about selling of good on behalf of the principal. Okay, so we have types of agency. We have agency by agreement or contract, and that is self-explanatory. Agency by estoppel. The general position of the law in this area is that is principal intentionally to otherwise cause the third party to believe that another person is agent and the third party relies in dealing with the supposed agency. So by estoppel, the principal is making the third party to believe that the agent is acting on his behalf and the third party relies and to work with the agent instead. Agency by ratification. This occurs in situations whereby a supposed agent portrays himself to be representing a supposed principal that consent he might not have secured. That's agency by ratification. When you are acting on behalf of a principal and you don't have his consent. So we have agencies by necessity. So we have agencies by necessity is the situations whereby a person acts in good faith as regard the property of another with the intention of protecting the interest, from the word necessity. When somebody acts in good faith on another person, protecting the interest of that person. So we have that as that. So we have the conditions necessary for agency. We have in case of emergency. We have in case of impossible acclaimed agent communicate with presumed principal. In case of emergency and in case of communication barrier. And we also have reasonable necessary having regard to common circumstance of the case. when it's a reasonable thing to act, just like necessity, agency of necessity, when you act in good faith. So we have, I think that will be all for today. Okay, let's just quickly take the duty of an agency, the duty of an agent, duty to perform, duty to be loyal, duty to care, duty to act in good faith, and duty to give account. So we also have the duty of the principal. We have duty of remunerate in the sense that you pay whatever things agreed to the agent, duty to reimburse, and indemnity. So definitely it has to do with appreciating the agent. So I think I'll be stopping here today. I think all these are well explanatory enough. So thank you very much, everyone. Thank you for. It's been a very long class, and I'm so exhausted right now. And quite unfortunately, NEPA has done their stuff. How we done them from Nigeria. So thank you very much, guys. It's been a wonderful time having you guys to stick around to this moment. So tomorrow is your exams, and I wish all of you the best of luck. I mean, it's very easy to pass in National University. Just put your time into studying, and I mean, the easiest exam to even pass is this pen and paper, because you can use your discretions, and so far you're not off tangent, you'll be awarded marks for what you have written. So make sure you write your matric numbers clearly on your answer sheet on the very first page. When you are giving the answer sheet, even when you have not been given the question sheet, do well to write your matric number, the study center, the semester, whether it's the first or second semester. I think that should be on your portal. Sometimes first semester is not first semester, it's second semester. Your study center, your matric number, study center, your name in full, the date, the course code, and the course title. You write all this on the very first page. There are columns for you to fill out with all this information. And when you are done with answering your questions, like if you're asked to answer 4 questions, maybe number one is compulsory and any other 3 questions, there's a column just on the base of the booklet, whereby you can write all the questions you've attempted. You write them. That's the last thing you do before you go and submit. Actually, after I've gone through all my own questions and I've gone through all what I've written, I've corrected any error or mistakes, I come back to the front page and I answered question 1, comma, question 5, question 4, question 2. So that's that for that. So you guys can drop in the comment section the next class you want us to take, the next course you might want us to take together. Thank you very much. Um, so we can all agree together on the next course. You can also drop the message on the WhatsApp group, and we can all have a great time together once more. So thank you very much, and I look forward to seeing you in subsequent classes. Bye bye.